We're seeing a clear shift in tone across global markets with a late week risk off wave beginning to take hold after record highs in US equities. The key macro driver right now is geopolitics with the Iran situation front and center. Markets are increasingly uneasy as US Iran talks remain stalled and rhetoric from Washington continues to harden. While there's still no meaningful resolution around the Strait of Hormuz, disruptions to shipping flows are keeping energy markets on edge and injecting a fresh inflationary impulse into the global outlook. That's feeding directly into price action. Oil is pushing higher again, reinforcing stagflationary concerns and putting upward pressure on global yields. U.S. Treasuries are extending the recent sell-off with 10-year yields back above 4.5%, underpinning the broader dollar bid. The yen remains somewhat conflicted, caught between safe haven demand and rising U.S.-Japan yield differentials, especially after stronger Japanese PPI data added to BOJ tightening speculation. Equities are reacting accordingly. U.S. futures are under pressure after fresh highs on Wall Street, with the S&P 500 and NASDAQ both softer. The broader narrative here is that higher yields and geopolitical uncertainty are starting to challenge stretched valuations, particularly in tech. In commodities beyond energy, we're seeing a notable reversal in precious metals. Gold and silver are sharply lower despite the risk-off backdrop, suggesting that the dominant driver is the move higher in real yields and the stronger dollar rather than safe haven demand. From a policy standpoint, the Fed remains in wait-and-see mode, with officials signaling no urgency to move rates in either direction, even as bond markets continue to push yields higher. At the same time, global central banks are facing renewed pressure from energy-driven inflation, with Japan's producer prices highlighting just how quickly cost shocks are feeding through. So stepping back, the market is juggling three key themes: escalating geopolitical risk, rising yields, and still resilient but increasingly vulnerable risk assets. As we head into the weekend, positioning looks cautious, and unless there's a de-escalation on the geopolitical front, this risk-off tone may have further to run. That's all for now.